Hey guys, Matt back in the saddle here, back at the desk, ready to do some more good due diligence deep dive videos for you, as opposed to the videos that I did earlier this week in my pajamas. Now, why do I have a shoe on my desk? Well, that's because if you watched my BlackBerry video, you may have seen a comment down below where when the stock was trading around 11 or 12 bucks, I left a comment in reply to somebody else's comment that had said that they would send it, that Wall Street Bets would send BlackBerry stock over $20. And I left a reply saying, if BlackBerry hits $20 by the end of the week, I will eat my shoe. Well, I should have learned my lesson just by how Wall Street Bets has already done something so insanely crazy with the GameStop short squeeze, which is far from over, and I am holding the line. But BlackBerry hit over $20 not that week on the Friday. It actually went over $20 the following Monday. So I actually ended up winning that bet, but you guys still blew my mind with the fact that BlackBerry could actually hit $20 a week later. I should know better. I'm all over Wall Street Bets. I know exactly what we're all capable of. But I got very, very, very close to tasting this disgusting shoe. And thankfully I don't. So I'm going to be a little more careful with the bets I make with you guys. But so today's video is actually on silver. I've been just scrounging around Wall Street Bets looking for the next topic that's being covered by a lot of people, trying to understand where the momentum is shifting, where the talk, the discussions, if you will, are happening. And of course, 99.9% of everything on Wall Street Bets right now is GameStop and then a bunch of other potential short squeezes such as AMC, Nokia, amongst many others. But with all of that kind of taking the limelight, I hadn't really seen much other discussion around any other kind of stocks until I noticed over the past 3 or 4 days, silver was coming up more and more and more. And so I started getting curious and I started wondering, well, what's going on with silver? Why was bullion kind of trending on Wall Street Bets, making the rounds and getting a lot of interest? So I started diving deep. So we're going to jump in over here to a post on Wall Street Bets, and I've got several of them because I want to kind of lay out what I'm seeing and what you'll be seeing as well if you dive in Wall Street Bets and start looking for this kind of stuff. You're actually going to see a lot of pro and some con, and I want to present both to you guys. I definitely have an opinion on this, which I'll share with you guys at the end of the video, but I don't feel like I would be doing this video justice if I didn't show you both sides. So I want to be able to show you guys everything I see and hopefully help you guys make a decision on whether you want to invest in this or not. So let's jump right into it. So this post is from Ditto Mystery, and they are bullish on silver. So with Biden's green revolution, we'll be seeing an even higher demand for solar panels, electric vehicles, and many more products that require it. Given that there's already a shortage, it's the perfect time to squeeze and teach JP Morgan and COMEX who's boss. What are they making reference to there with JP Morgan and COMEX? Well, JP Morgan has a short position, a large short position on silver. COMEX is actually the index that trades futures in metals. So they end up going into what the best thing to do is to invest in silver, in their opinion. And they say to buy futures and to demand physical delivery in silver. We'll get into that in a little bit. Going to the next post, you'll see, is SLV, silver, is silver a trap? Here you'll see that they found an SEC filing where Citadel advisors, and if that sounds familiar to some of you that have been paying attention to GameStop, that's because Citadel is one of the hedge funds that was shorting GameStop. They have filed a 13F HR form disclosing ownership of over 6 million shares of SLV with total holdings valued at $130 million as of September 30th, 2020. Citadel advisors had filed a previous form disclosing 0 shares of the Silver Trust at a value of $0 back in August of 2020. So this person is making the case that, hey, they're losing big time on GameStop. If they have a very large position now in silver, and we're starting to see a bunch of silver posts on Wall Street Bets, this kind of gets it a little bit into conspiracy territory. But the thing is, Wall Street Bets is a forum that is public. Anybody can make an account. Now, you do have a 30-day time limit where you can't post in Wall Street Bets until you've had an account on Reddit for over 30 days. However, if there are a bunch of accounts out there, this person is kind of hinting at that, could some of these people posting about silver be bots in order to drive, the masses, if you will, from Wall Street Bets to invest in silver? Because you kind of have this juicy scenario forming right now where you have a very large bank in JP Morgan that is shorting silver like crazy. Silver hasn't really gone crazy high in price or kept up with gold, for example. When gold spikes due to concerns around inflation of fiat currency, like the US dollar, gold spikes, but silver hasn't really been seeing the same type of moves. So there's a lot of discussion around manipulation of silver and just forcefully keeping the price down. So if Citadel is taking an opposite position of JPM while they're losing crazy money on GameStop, are the people that are posting about silver, and not all of them, but are some of them kind of bots and getting thousands of likes from fake dummy accounts? I'm not really sure, but it's like I said, it is on the conspiracy side, but it's just something to be wary of if you're looking through Wall Street Bets. What I would suggest is when you're reading any kind of due diligence on Wall Street Bets, this should just be a bare minimum that you do if you're going on Wall Street Bets for due diligence. You click on the person's account and you check their post and comment history, and you basically look to check that it's a real account, because sometimes these people will have multiple posts in the last 2 or 3 days, and it will only be about the topic that you're actually reading about, and they will have mysteriously gained an insane amount of karma. Karma is when you get these upvotes on the forum. It shows you for every one upvote you get 1 karma. And so it's kind of like fake internet points, if you will. And these accounts will have tons of these points, and it just doesn't make sense. It doesn't line up because Reddit doesn't really work that way. Usually it takes time to build up karma. So it's just something to be wary of and just to be aware of in the back of your mind. So now we're going to go to another post where it's from The Happy Hawaiian, posted 3 days ago, and they go into a very, very long due diligence post about silver and how it's actually a short squeeze. And this is because with what we're seeing in GameStop and all these shorts applying tons and tons of pressure on the stock, and then now naturally buying the stock and causing these shorts to cover their positions is causing a short squeeze on GameStop. They're seeing a similar story possible on silver. So because JP Morgan Chase has such a large short position on silver, they believe that if you buy a ton of shares in silver and send the price up, the same type of short squeeze scenario can happen in silver. We're going to take a little bit of a further look as we keep going through these tabs at whether or not that is a possibility, in my opinion at least. So like I said, a very, very, very long post, but I want to focus on this one part of their post called the fundamentals. The current gold to silver ratio is 73-1, meaning the price of gold per ounce is 73 times the price of silver. Naturally occurring silver is only 18.7 times as common as gold, so this ratio of 73-1 is quite high. Until the early 20th century, silver prices were pegged at a 15-1 ratio to gold in the US because this ratio was relatively known even then. In terms of current production, the ratio is even lower at 8-1, meaning the world is only producing 8 ounces of silver for each newly produced ounce of gold. Global industry has been able to get away with producing so little new silver for so long because governments have dumped silver on the market for 80 years. But now their silver vaults are empty. At the end of World War II, government vaults globally contained 10 billion ounces of silver, but as we moved to fiat currency and away from precious metal-backed currencies, the amount held by governments has decreased to only 0.24 billion ounces as they dumped their supply into the market. But this dumping is done now, as the remaining supply is basically nil. This 0.24 billion ounces represents only 8% of the total supply of only 3 billion ounces stored as an investment globally. What they're basically saying here, and they go into it further, is that the other 92% is basically held by investment banks, institutions, retail investors like you or I that are stashing 500,000 ounces of silver in a doomsday vault somewhere, which I don't doubt is happening at all. But more or less that there is a lot of silver that is being stashed, which is essentially bringing the price of silver, or I should say, I'm sorry, I don't want to comment on price yet, is causing a choke on the supply of silver. Now going back to a post about be a little more cautious on silver. Think twice before investing in SLV. SLV saw an inflow of almost $1 billion on Friday, which is nearly double that of the last record. There are large banks currently naked shorting silver. Naked shorting is what we've been seeing over at GameStop. On the futures markets, one of them is JP Morgan. It is essential to understand that there is an interest in suppressing the price of silver as every increase undermines confidence in the US dollar. So this one goes into kind of the manipulation aspect, that the power that some of these larger institutions may have in manipulating the price of a commodity such as silver. So that is another item to keep in your mind, as if you decide to invest in silver and you look further and do your own research and try to understand what kind of moves have institutions made in the past on silver when it started spiking like crazy in price. I mean, all you really have to do is look at the price of silver in the past and you'll see that it'll skyrocket and then it'll plummet. And then it'll stay there for a while, and then it'll skyrocket, and then it'll plummet. Now, I can't say for absolute fact that those plummets are caused by manipulation from these institutions. However, if you choose to invest in silver, just please be cautious and keep it in the back of your mind, just like I was talking about those bots on Wall Street bets and whatnot. It's just something to keep in the back of your mind, that if you invest and you see a crazy spike and you're ecstatic because you're making a crazy return on your investment, just please be wary, because looking at historical context, it can plummet just as fast, if not faster. So just keep that in the back of your mind. Going into a little bit of that, those accounts where I was talking about to be wary of, that are posting about silver on Wall Street Bets, you'll see that I actually found another article on silver here. It was called The Biggest Short Squeeze in the World, SLV Silver $25 to $1,000. Very optimistic, very bullish on this. They have an insane amount of awards on this post. They got 14,000 upvotes in 4 days, and the post was removed. I'm not sure why it was removed. However, I have a suspicion. So there's a bunch of comments down here. There's one guy by the name of Reddit Interests who's been kind of copying and pasting his same post here, which is its own due diligence post in itself, but posting it as a comment to anything silver related on Wall Street Bets. We're going to take a look at both of these guys' profiles, Reddit Interests and JJALAJ30. So if I look at the original poster first, this is kind of what you should do if you're ever looking at due diligence. They actually created an account about a year ago, but they only have 2 posts. And their 2 posts are on silver, and they were made in the last 3 days and 4 days. So 3 days ago, 4 days ago, and then their comments, if you go into that, it's basically in the last 4 days. They have 2 comments on some stuff from like 8 months ago, but they just started back up 4 days ago when it was all about silver. All this karma, all these awards look like they came from those silver posts. It's just, it looks a little bit suspicious. I don't know if it truly is or not. It's just something to keep in the back of your mind, like I was mentioning before. If I look at the other person's account, same exact thing. Karma buildup, awards just from some silver posts. Are there bots that are liking this stuff? Again, I don't know. This is just a suspicion. It's just something to be wary of, that when you're reading stuff, you always kind of want to do your own research as well. So getting away from the post now and touching on what's going on Wall Street Bets around silver, that should give you kind of an overview that you have a very bullish crowd on silver. And then you have some people that are just telling you to take some caution and make sure you just don't go YOLOing your entire savings into it, and make sure you do some of your own research. So jumping into it, the case for investing in silver revolves around two main arguments. One is that it is a hedge against fiat currencies. It's a hedge against hyperinflation of fiat currencies. And then the second argument is that supply cannot meet the demand. We're going to jump into both of these and try to unravel it a little bit so that we have a better understanding of what's really going on here. So if I jump into this article here, which you'll see on a lot of posts on Wall Street Bets, and which you'll probably see in a bunch of articles if you look this up, silver is used in several industrial facets, one of which is automobiles. Specifically, for some reason, people focus on electric vehicles. Yes, electric vehicles do use more silver than normal vehicles. And when I say normal, I'm talking about internal combustion engine. However, internal combustion engine vehicles still use a lot of silver. It's per each internal combustion engine vehicle, I believe I read it was roughly 15 to 18 ounces of silver per vehicle. And then for electric vehicles, it's maybe, I wanted to say like mid 20, like 24 to 30 ounces of silver. So almost double. But irregardless, looking at this, you'll see that there's a portion of this article that I highlighted from visualcapitalist.com, and it says silver is a critical material in the automotive sector, which uses over 55 million ounces of the metal annually. Auto manufacturers apply silver to the electrical contacts in powered seats and windows and other automotive electronics to improve conductivity. So 55 million ounces. Automobiles use a lot of silver. That's obviously a lot of silver. But in the grand context of silver globally, how much is that? Are we talking about a drop in the bucket? Are we talking about a very large portion? Well, let's go to the Silver Institute. So the Silver Institute, they have all kinds of information on silver. If I go into this one press release, it talks about silver consumption in the global automotive sector to approach 90 million ounces by 2025. So obviously 90 million is more than the 55 million we just saw in the other article, but this is talking about a forecasted increase over the next 4 years. Notably, by that time, this amount, the 90 million by 2025, it will rival consumption in the photovoltaic industry, forecasted to be 98 million ounces this year, and currently the largest application of global industrial silver demand. So now we understand that it's not only used in automotive vehicles, but it is also used in the photovoltaic industry, which is actually the largest industrial use of silver. Okay, but Matt, that still doesn't answer my question. I understand that autos use a lot of silver. I understand that the photovoltaic industry uses a lot of silver. What is it in the grand scheme of things? Well, let's go to the World Silver Survey, which is a survey released by the Silver Institute. So if we go to the Silver Survey for 2020, this was actually released in April of 2020 when the pandemic was starting. So the 2020 numbers are actually a forecast. So keep that in mind while we're going through this. What you'll see here is a summary. Now this is, there's some good information in this. It's very, very long. There's several different chapters that jump into mining production, the recycling of silver and demand and all kinds of stuff. I just want to focus on high level numbers here. What you'll see is this is in millions, and the total supply that they were showing from 2011 all the way to 2020, you see the total supply going up over 1 billion, increasing, slight decrease, a little bit of an increase, and then a bigger decrease. So overall, it looks like it's been decreasing for the last 4 or 5 years. Why is the supply decreasing? Well, if we take a look at demand, that may give us an answer. Demand has also been decreasing for the last 4 years. So we were over 1 billion and now we're under 1 billion over the last 4 years. It did uptick in 2017 and 2018 and 2019 actually, but then took a bit of a steep drop off in the forecast for 2020. Now, We have to take this number with a grain of salt because this is just a forecast, but the forecast is simply telling us that due to the pandemic, what they believe, if you actually read into this, what they believe is that demand is dropping due to, for example, the automotive industry, just all the industrial uses of silver, actually demand going down because of manufacturing sites being shut down due to the pandemic. That is also the main reason why supply was decreasing in this 2020 forecast, is because there's a lot of mines that were forced to shut down in South America due to the pandemic. So you kind of have the pandemic affecting both sides of the chain here. Now, one last thing I want to mention about the Silver Institute is if you Google the Silver Institute, you will find that there are a lot of people that question the figures, how they get to these figures. And so there's mixed opinions about the numbers that they publish. So you'll see that here in the Seeking Alpha article, which says warning misleading silver supply and demand data, and it goes into the Silver Institute's report. So I went and got another source, which is from the CPM Group. So this article titled CPM Group Pandemic to Dent Silver Supply and Demand in 2020. So right off the bat, we're seeing a separate group that is basically telling us that 2020, there's going to be lower supply and lower demand, which is the same thing we saw from the Silver Institute. The global coronavirus pandemic will hurt both silver supply and fabrication demand in 2020, but the ultimate impact on the market could be offsetting, said CPM Group in its Silver Yearbook 2020 release today. Basically what we went into, mines were shut down, but at the same time, manufacturing sites will be shut down, so you're seeing it on both ends. The net impact of these disruptions is near zero at this time, so the offset from supply is being matched by the offset in demand. CPM Group suggested supply and demand interruptions may clear up around the same time. Nevertheless, a slow recovery by consumers who may hold back on non-essential spending may have a negative impact on prices, the consultancy said. However, government and central banks are injecting liquidity into financial markets to offset negative economic fallout, which is supportive for metals in general. So what they're saying is the actual physical use, like within jewelry, silverware, manufacturing, may take a hit and will actually cause silver prices to probably go down as opposed to up. But this may be more than offset based on people investing in silver. That is a bit speculative. We don't know. If, for example, the silver movement takes off, that could very well be true. The gold-silver ratio ended 2019 at 83.9, then climbed to 125.5 by March of this year. This means it took more silver ounces to buy an ounce of gold, meaning an underperformance by silver prices against gold. It is not unusual for silver to lag gold's performance in the early stages of a revival in the prices of these metals. Silver has often initially lagged and later outperformed gold in cyclical upward moves in precious metal prices. While silver is not expected to put in this sort of strong performance in the near future, it should be expected in the medium term. The disconnect in the level of investor demand for the two metals last year, despite the same factors influencing investor demand, leaves a gap to be filled, which is tilted in the favor of silver price appreciation, given its recent past underperformance to gold. Let's get to the point here. CPM Group reported that total silver supply rose to 962.6 million ounces in 2019 and 954.9 million the year before. Global mine supply rose, although the output during the last 2 years was the lowest since 2013. Secondary supply, or scrap, rose to 202 million ounces in 2019 from 201 in 2018. For 2020, CPM Group looks for total silver supply to fall to 938.6 million ounces. So all of this really kind of matches the Silver Institute. So I just want to touch on that the Silver Institute, even though the metrics may be a little not necessarily mixed opinion, like I was saying before, at least we have CPM Group here, which even though the numbers differ a bit, it trends the same. They're showing the research to show the same trend. If this level of total supply is realized, it would be the lowest level of silver supply since 2008, when it stood at 913.1 million ounces. The weakness in total supply during 2020 is expected to be driven entirely by a decline in mine production, with secondary or scrap supply rising slightly during that year. So that's the point here. The point in this whole article is that supply is going to be lower than it ever was since 2008. And just to provide another source for that, we have Numismatic News, which is a coinage website which covers anything to do with coinage. And this one part I want to cover really quick. The forecasted combined net result of physical supply and demand is a 2020 surplus of 31.5 million ounces. However, that figure is not the bottom line. In 2020, it looks like the net investment in exchange traded products, especially exchange traded funds like SLV, will reach 350 million ounces. When you factor this in, this demand, which is touted as physical demand, but may be largely on paper, the net silver shortage for 2020 could be 318.5 million ounces. That is a massive statement, because what that is more or less saying is that, all right, the Silver Institute, all right, the CPM group, they're talking about demand and supply falling, that the industry may not pick up as much as a supply will over the next year or two, which couldn't be bad for silver prices. But the thing is, you have a lot of investment in silver. And when you invest in these ETFs, they have an obligation to invest in the actual physical silver to back your investment. So if a lot of people are investing in silver, now you're starting to push it towards shortage levels, extreme shortage levels, to where there's so many people investing in it and there isn't enough supply to back the investment in it that, well, you could cost squeeze, where the price could keep going up. However, what's keeping these ETFs from just saying on paper that they've backed your investment? Well, they have obligations to meet. But the only way to 100% be sure is what some of those Wall Street Bets posts were talking about, and that is physical delivery of silver. If people actually order their silver and they stash silver at home, and you do this by the millions, right? Millions of people, you could definitely cause a short squeeze. Now, how realistic is that? Well, I don't want to go out on a limb and say that's not realistic, because many people would have said the GameStop squeeze was not realistic and would have never happened. And look what the WSB Army did. I mean, they have sent the stock over 300 now, and it broke 500 earlier in the week. I didn't think that BlackBerry would have hit over 20 the week I made that bet. It hit over 20 the following day, that Monday after. So I am not one to doubt the WSB Army at all. So how do you invest in silver if you find that, all right, there's probably going to be a crazy shortage in silver and it hasn't kept up with the price of gold? And on top of that, you have an insane amount of liquidity in the market right now, which hasn't been really reflected in inflation rates. So you've got $9 million, you have $9 trillion injected into the economy, 22% of all US dollars basically issued in the last year. That right there should just blow your mind. And inflation is publicly recorded right now at 1.4%. Now, there's some discussions to be had about how inflation is accounted for, funny accounting metrics, all that kind of stuff with consumer price index. I'm not really going to go into that, but let's, for just argument's sake, that inflation is 1.4%. Just for argument's sake, let's just say inflation is low, and that velocity of money is very, very low, and that's why inflation is staying low. That even though you have a lot more money, a lot of that money that's being pumped into the economy is being put into stocks, being put into savings, and because it's not, flowing through the economy, that velocity of money is low, therefore keeping inflation down. Well, if we assume that, then really this just becomes a conversation of, all right, it's not necessarily going to be a play against hyperinflation. That may just be a bonus, but it becomes more of a play on supply and demand metrics. And so if people keep investing in this and order physical supply to be shipped to them, well, yeah, you could definitely probably cause squeeze, but at the same time, you'd probably be making Citadel a lot of money since they have a large position in SLV. So let's take a look at PSLV versus SLV. PSLV is actually Sprott's index. SLV is probably the more well-known of the silver ETFs. The iShares Silver Trust, SLV, is currently one of the most popular silver ETFs, but lacks some of the benefits that are associated with Sprott's Physical Silver Trust. The main difference between the two is that PSLV allows investors to redeem their shares for physical silver at a much lower value, ensuring that there is an obtainable product behind the trust. SLV, on the other hand, does offer this feature, but at a value that is almost unobtainable for most investors. They must purchase 50,000 shares of the trust to have it redeemable for actual silver, which would cost $697,500 as of June 6, 2019. PSLV deals in a much smaller increment, as one only has to purchase a London Good delivery silver bar, which would cost only about $15,000. Not only is this cheaper, but it affords investors the realistic possibility of storing silver at a secure location in one's own house. So how realistic is it that an army of people buy enough PSLV to each have over $15,000 worth of silver to where they can actually request physical delivery of their investment to their home? I don't know. Again, I'm not one to doubt the WSB Army, but $15,000 is a very nice chunk of change. And that's no small investment. So, if I'm choosing between SLV and PSLV, I'm definitely going PSLV. I like that you don't have to have $700,000 in silver to get delivery to your house. In case I ever do amount over $15,000 of silver in PSLV, yeah, that'd be pretty cool to get delivery and just to have it and then take that off the market, so that way it actually causes a supply, I'm contributing to the supply shortage to make the price go up. But food for thought. And the last thing I want to go into is there was a separate post on Wall Street Bets where they're talking about, the shortage, it's real, this is what's happening. But they mentioned that another way to invest in this is to invest in silver mining, because silver miners, it may cost them, like they say here as an example, it may cost them $24 an ounce to mine an ounce of silver. Now, if they can sell it on the market for $25 an ounce and they're netting that $1 an ounce, if silver price goes up, the cost of mining silver doesn't go up. It's still $24 an ounce. So if it's $50 an ounce, now they're making $26 an ounce. And so this commodity mining company really increases their revenues and their profits based on the price of silver going up. The stock would benefit. So that's another way you can get into this if you're not looking to get into the ETF and order physical silver. The ticker for First Majestic Silver would be AG. That's the one that this person recommends. This user's name is Muffles TV. So check them out if you're interested. But that's all I have today, guys. I'm very, very intrigued by this silver play. I understand that we're holding the line right now on GameStop. Kind of don't divert attention, but this is just something that I wanted to comment on because I am seeing this pop up more and more on Wall Street Bets. And as of right now, it looks like the plays really are PSLV as an ETF or miners such as AG. If you want to get in on this potential short squeeze. However, just keep all those things that I was mentioning in the back of your head. Understand that everything isn't necessarily, rocket going to the moon. And there may be some things to just kind of keep an eye on. Just understand that there may be bots on Wall Street Bets. I mean, we know that this has happened in the past for other tickers. Why would silver be any different? It may not be that that's the case, but you never know. And also just understanding that this probably isn't a play on hyperinflation of money. That would be a nice cherry on top, and it's something that would definitely increase the price of silver very quickly if that were to play in as a factor. But it looks like this is more of a play on supply and demand. And it doesn't necessarily really look like it's a play on supply and demand from an industrial use perspective, with automobiles and EVs increasing supply over time. Those numbers, those increases don't look like they are really that massive when it comes to the overall silver market globally. What looks like it's really impacting the market is how much people are investing in the stock and what kind of ETFs are investing in, whether it's an ETF that actually needs to be backed by the physical silver when somebody buys it or not. And so if it does need to be, that's going to be a lot more impactful, and that could definitely trigger a squeeze. So those are the kind of things that you need to be thinking about if you're investing in silver. So hopefully you guys enjoyed the video. That's all I have today, guys. If you did enjoy it, please consider subscribing if you're not already subscribed. If you didn't like the video and you enjoyed it, please consider liking the video. That helps me out a lot. But until next time, guys, see ya.